And welcome. This is Mary Ellen McGonagle with your weekly MEM Edge show, the show where we bring you where the action is in the broader markets. And quite a volatile week. The intraday swings were really something to behold last week, but in the end, I think we are seeing some daylight here. I will share all of that with you. Let's take a look at what we're going to be reviewing here in today's show. First up, as usual, we are going to go ahead and take a look at the broader markets and see where did we close the week. From there, we'll get behind the scenes, take a look at those underlying sectors, industry groupings, and really get a feel for how we are ending this rather turbulent month here in January. Also, trends that are taking place in earnings. It's easy to forget that earnings season has begun, but it is a big driver taking place, and we'll get into that. I'm going to share with you names from various sectors that have reported and see what the markets are thinking of what's being reported so far. And then what's up with commodity stocks? We're going to take a look. Commodities continue to rise. We'll talk about why and ways to capitalize. And from here, let's go ahead and take a look at some of the more impactful headline news this week. And first up, and certainly one of the most powerful news items that came out this week was Fed Chair Powell and the FOMC commentary that was provided after this week's meeting. And it was all about uncertainty, with Powell citing the committees being unclear on precisely how many times, as well as the number of rate hikes that will be needed. It's going to be on an ongoing basis as data comes in, and that is an uncertainty that the markets really don't need, nor do they like. So that really shook things up midweek. We did see consumer confidence numbers coming in. It slipped in January, all about high inflation at a 40-year high. Jobless claims did drop as the Omicron variant is hopefully seemingly fading. We also did see durable goods orders drop very sharply in December. That is another part of this mixed economic outlook that we are seeing. And consumer spending also slipped in December, another inflationary fear there. Also, consumer sentiment in January fell to a 10-year low. And again, inflation there, but Omicron variant is factoring in there as well. So overall, we are getting pretty clear-cut sense here that things did slow down in December and then possibly into January. We'll certainly get more intel as time moves on there, but let's go ahead now and take a look at the broader markets. And we're looking here at a weekly price chart of the S&P 500. And I've gone ahead and marked this up. This is something I shared with my MEM Edge report subscribers last weekend, and really using historical precedent to gauge where we may or may not be at this point in time. So going back historically to the two most previous bear markets, we can see that a negative RSI coupled with a break below this blue 200-day simple moving average. Third indicator, this faster moving momentum indicator, stochastics, turned negative. So each of these two times, it did in fact then return into a bear market. So into last week's close, we did get the very similar dynamics with that break on the RSI, stochastics turning negative, and that break below the 200-day simple moving average. So in my report this week, those of you that are subscribers and are watching, you can look forward to a daily chart view. I'm going to go ahead and dig in and some really interesting dynamics taking place into the close of this week. So a little bit uplifting. So we can from here go ahead and take a look at the 11 underlying sectors within the S&P 500. And so they are listed here. I've gone ahead and added a relative strength indicator. We want to see where that relative outperformance is. The broader markets were actually able to close the week up. The S&P up 0.4%. Midweek, it was down almost 1.5%. So a nice recovery into the close. So I'm going to hit this update so that we have updated into after the close. And No surprise here, energy up here at the forefront. Now, I will say going into this week, it was suspect, if you will, as to how energy would fare. We were starting to see some of these momentum indicators trending downward. Our MACD was poised to have a negative crossover, so reminiscences of this October period were coming in, but the Ukraine-Russia tensions really boosted oil prices, all about Russia potentially putting sanctions against an already clutched European energy market if they were to take sides. So at the end of the day, we did see energy stocks hit a new high, pull back, but buyers came in today on that pullback. Best performing group up 4.4. I'm sorry, it was actually up over 5% for the week. So really nice continued uptrending taking place in those energy stocks. And we did see, as we progressed toward earnings, I'll share with you a name that came out and reported this week, and a big bellwether name. So from here, consumer staples, they did falter midweek, but came in to, for instance, today it was up 1%. So consumer staples still here at the forefront. They did fare worse than the markets, but a bunch of earnings in this space as well. So in sharing those earnings, it's not simply just to provide insight into how corporates' earnings are proceeding. More important there is it is a wonderful way to gauge investor sentiment. So as we move forward, so utilities still up here at the forefront. And what I did want to share with you, really from my work, most importantly, is this rally into the end of the week. Tech stocks up 4% this week. The group overall up 2.3%, well above the markets. So interesting activity taking place. We have this higher wedging, higher lows, break above these moving averages. So I'm going to need to see a couple more things, but really very encouraging here action in the technology space. And then as usual, of course, we want to make sure that you're aware of these more deteriorating areas. I talked about consumer sentiment. We got numbers last week about consumer spending in December slowing and high inflation. It is here to stay for a while, and it really is negatively impacting potentially retailers, of course, of all stripes, and also wage growth pressures are hurting that area as well. All of this will be making more sense as, again, we move into the segment here on earnings. So let's take a look at one other area that I wanted to share with you that is really kind of ending the week a little bit better here. Financials, XLF is the ticker symbol, had broken below this 200-day simple moving average at the beginning of the week. So it's attempting to wedge higher, definitely still have more work. But from here, let's take a really closer look. I'm providing you in this next slide here is the sub-industry grouping. So really getting behind the scenes, if you will, beyond those sectors to really dig in and take a look at some of these groups that impact those sectors. So again, that RSI indicator and in descending order, and we can take a look at Brent crude pricing up at $90. That is just one of those significant bellwether numbers. So we did close the week, again, talked about those pressures and tensions that are taking place that are pushing. Also, there is a demand aspect here as well. Oil inventories globally are below their 5-year average. So we certainly have other dynamics at play here. A lot of that inflation can be seen if any of you fill your cars up on a regular basis out here in LA. It's we have a handle, $5 plus. I've seen $5.20 per gallon, but really increased oil prices hitting the consumer as well. So from here, we can go ahead and take a look at some of these other areas. I did want to spend just a little bit of time here. This is the volatility index, VIX. Those of you may know it also as the fear index. So we have a little bit, let me just go ahead and blow this up a little bit. And we can go back and take a look at some of the other the precedents here. This spike in November was that Black Friday crash, if you will, when the Omicron variant was first discovered. And we did see it very negatively impact certainly volatility, but also the markets. And then going into January, we have seen volatility really spike. It spiked to a near-term high here on Monday, getting up to this 39 level. And again, all about uncertainty as we were moving down the path toward the Federal Reserve meeting on Wednesday. Just an awful lot of uncertainty. Of course, the comments from Powell did not help quell the uncertainty, but take a look into the close. We are seeing a very nice dip here. So we closed the volatility here at 27. I'll go ahead and pull up a weekly. And really what we're seeing this week in particular is how, for those of you that really watch the markets closely, tons in the way of whipsaw action, but kind of interesting how we closed the week. So here's a weekly look at that volatility. You can see that it fizzled into the close, and this is what we like. I will need to see more characteristics to turn bullish, but certainly that volatility dropping is a good sign. So from here, let's take a look at some of these other sub industry groupings, and we can see there is one other area that those of you that watch the show regularly will know that I have been watching really with absolute, well, horror. That might be a little too harsh there, but this is the technology software ETF, IGV. Really wonderful area last year. We were able to capitalize on some of these nice moves in those software stocks, Adobe, Intuit, on and on. And then they fell as interest rates began to rise. A new high here in November. Those of you with the report will know we started peeling names off here, and take a look at the continued deterioration. However, into the close, we can see that IGV, for instance, was up 4% today, and it did end the week in positive territory. So again, soon, a little too soon here to make any prognosis, but encouraging, and we'll get into that more as we take a look at some of the companies that reported earnings this week. One area standout as well in that technology space are semiconductors, and we are seeing continued deterioration. The group was down almost 4% this week. And again, all about earnings. As we get into it, that will make sense. So then let's go ahead from here, because what I'm going to do is take a brief break, and we have so much more to cover. So stay tuned. Hi, this is Mary Ellen McGonagle, author of the MEM Edge Report. In my bi-weekly report, I highlight top growth stocks as they enter buy zones, and I educate subscribers on why that stock is attractive both technically and fundamentally. In addition, you'll be alerted to when it's time to exit that stock based on negative technical action. And this bi-weekly report gives you confidence by providing fundamental insights into why an area of the market is strong and which companies within that strong area have the best growth profiles that'll help propel that stock higher. Subscribers to the MEM Edge report are benefiting from my expertise in uncovering top performing growth stocks. Subscribe now to take advantage of my special trial offer. And we are back. I talked to you about earnings, and those of you that follow the markets will certainly know that Apple came out with their numbers today, Friday, and wow, great numbers. It was their best fourth quarter on record, despite supply chain issues going into the report. In fact, for most of last quarter, management was kept citing these supply chain issues. Despite them, the company came out with great numbers. iPhone sales were up 9%. Earnings, actually, the company guided higher into next year. And that is really what you will see thematically as we move forward. It's all about not only how the company reported, but super impactful is what management is looking forward to as the year proceeds. So that guidance higher into next year, super bullish. And we can see Apple is now poised to potentially break back above this 21-day simple moving average. And we had Apple on our suggested holdings list. It was one of the few names to really hold in well and perform well during that tough November into December period for tech names. So perhaps a re-emergence here of Apple. So let's take a look at another. I'm really sticking with well-known names in these larger industry groupings. So next up is a large food retailer, and they came out with earnings. This is McDonald's, MCD, ticker symbol here. And we can see another stock up 3% today on their report. They did come in, talked about same store sales were up 12.3%. That's the metric that these restaurants look at, analysts look at more closely than pure earnings and sales numbers. McDonald's did talk about inflation and labor crunch as headwinds for the company, and we could see they're looking for inflation. McDonald's management, they are anticipating that food, paper costs, things that impact them, will go into the high single numbers or double digits. So they're looking at expenses increasing quite a bit, but the stock rallied despite that. And again, all about those numbers. So let's take a look at another couple of companies. I really have a number of them here, but I'm going to be very selective because we want to pay attention to those names that are widely owned with a lot of eyes on them. So here we are with Tesla. This is another company that came out with a record Q4 profit, but all about management guiding going forward. Tesla is anticipating that they will not put out any new models this year for 2022. Supply chain problems are just going to be too much of a hurdle. So that's the outlook, that negative outlook, pushing the stock lower. Right now, it did find support at that 200-day simple moving average, but your outside momentum indicators are quite negative. So this is what we're going to continue to be seeing as earnings season progresses here. Let's take a look at ASML. This is a well-known Dutch semiconductor company, and they did come out January 19th. So they came out right about here with their earnings, and they did miss on sales. So that negative did push the stock lower, and in turn was one of the reasons we saw a number of semiconductor stocks. Let's take a look at one other well-known semiconductor name that came out. This is Lam Research, LRCX, and they also missed on their revenue numbers. They came in below estimates, and then the company guided lower for Q1, and you can see the huge hit the stock has taken subsequent to that announcement. So from here, actually, one last name. This definitely bears a look because it really impacted the group. Another semiconductor stock, Teradyne, TER, gapped down over 20%, huge volume. The company did come in above estimates. They increased their dividend. However, they guided into this year, their estimates, management guided much lower. So there again, that outlook, huge gap down, DOA. So I'm going to take a look here at some software names. I talked about the group potentially hope springs eternal for that group. I want these stocks to get back on track. So here we are with Atlassian TEAM. This was a nice big winner for us. We got into this stock before the gap up, rode it to this peak, and then of course, as it deteriorated, removed it from the list. I believe we had a 44% gainer on that one, but let's take a look at it this week because they did come out with numbers and the stock was up 9, almost 10% today. So why would that be? Well, they came in above estimates and management guided higher into this year. So the only caveat here is that despite this steep sell-off that the stock has experienced, it is still trading at an 89 multiple, 89 times trailing 4-quarter earnings. So we'll see, but I am encouraged here. I like the nice volume as the stock advanced. Another well-known software stock that reported this week, NOW, ServiceNow, back office HR company. And this, they also came in above estimates and guided higher. Actually, I'm wondering if I have that PE number correct, but more to the point here is this stock. Let's take a look at a weekly very quickly, and the stock is up 10.5% on the week. So that guiding higher, and certainly the fact that it's so darn cheap relative to its peak in price is moving that. So let me just see if I can share with you a couple of other names that came in with numbers, because, and those that are well known and have relevancy. So moving into the financial space, I'm going to share with you, they reported last week. This is JP Morgan. Actually, it may have been further ago than a week. Yes, it was earlier in January. And JP Morgan, you can see this gap down. So it is going to take a lot of repair to get this stock back on track. But more to the point, the company did report 5% below estimates on their earnings. But most important is that management, Jamie Dimon is the CEO. He's anticipating expenses to increase this year. And it's not just wage pressure. Wall Street firms are needing to pay up to get qualified employees, but also they're going to be spending on technology, marketing, and they anticipate travel, corporate travel to pick up. But again, all about guiding lower due to higher estimates. Let's take a look at another big bank, equally similar as it relates to management anticipating higher expenses. This is SVB Financial, very well-respected bank in the industry. They did come in above estimates, but again, higher expenses not only hurt their margins in Q4, but anticipating going forward. One last name in the financial space, Goldman Sachs, again, all about expenses increasing and impacting their bottom line. Let's take a look at another bellwether name. I talked about TEAM and a couple of others, but certainly this is the big kahuna here, Microsoft, MSFT, and they came in not only with fantastic numbers, they also saw a huge booking in their enterprise software space and really great numbers. The company guided higher. So we can see a nice response here, breaking back above these shorter term and 200-day longer term moving average, and potentially trending upward here. And also revenues and earnings up over 20%. So this is another huge spark for the software space. MACD just poised to cross positive from this lower area. And this is what I've been telling subscribers, that when we get that turn in the markets and then in individual groups, you can anticipate super nice returns after the sell-off. Chevron came out with numbers, and we can see that they did pull back. However, buyers came in on the pullback. They did miss on their earnings, but it was an obscure non-cash charge was the reason. So the stock was able to rally on that. Caterpillar down 5%, and they had a big earnings and revenue beat. However, two news items were released today when their earnings, and that is that they're anticipating demand from China to be down this year, and then also supply chain margin pressures. They anticipate that it will impact earnings. So there you are with management guiding lower. One last name in the consumer staples space. This is Church and Dwight, and definitely a bullish outside candle formation where the stock breaks below the prior day's low and then closes well above the prior day's high. And this, they came in above estimates, but management guided higher. So let's take a look and move on. I wanted to share with you a screen here that is with a service called FinViz, and we're looking at a daily price chart of the futures market. So I'm just going to scroll down here a little. I want to share with you what is taking place particularly as it relates to food and grain products. So we can see, for instance, lean hogs gapping up, corn, soybean oil, soybean meal, oats are turning. So, and then generally soybeans as well, cotton. So what we are seeing here in these commodity, particularly as it relates to these products, is a continual uptick here with the ability for these product providers to increase pricing. That's exactly what they're doing. Let's take a look at a company that is reported this week and is a big benefactor of this uptick here in these commodities, whether it's fertilizer providers and so forth. So this is Archer Daniel Midland's ADM, came out with great numbers, guided higher. You can see the significant push higher the stock has had. We can also take a look at CF. This is CF Industries, another fertilizer. I talked about both of these stocks in the pitch this week. If you haven't seen it, I would say take a look, because I identified these two as well as three other stocks, but this company or this stock is forming an ascending base and poised to break out higher, which is, of course, quite constructive. And I wonder if I have time. We're running out of time here, but I did want to talk very briefly about this. I'll share with you another name that I like here, BRKB. This is another name I talked about on the pitch, Berkshire Hathaway's fund. And when you look at the top holdings in this fund, Apple is the top holding. They also, AXP is another top holding, and we can see the stock really had a nice downtrend reversal, all about earnings. KR, Kroger, is another big holder, actually deteriorating a bit here. But the company is, Berkshire Hathaway's portfolio is just chock full of companies that have been able to raise their pricing without a lot in the way of pushback. Coca-Cola is among those top holders. They also are high dividend yielders, and they fare well during periods such as now. So I am going to leave it here. And for those of you that have not already, please take a look at my MEM Edge report. This week, we are going to dig deep into the broader markets, what we can anticipate going forward. Another big week next week with earnings. We have Google, Amazon, Meta, among others, reporting. So lots to stay on top of, and that's what this report will do for you. Special offer on pricing for 4 weeks. So I urge you to take a look at that and have a great weekend. I will see you here next week.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.